All right. Well, good afternoon, everyone, and welcome back. I hopefully everybody's getting adjusted with this new platform that we're testing. It's again, it's pretty interactive, and I do apologize for those who had some issues in the previous session with the sound. We hope that the information was able to get through. But good thing is everything's getting recorded. It's also on YouTube Live, so we are broadcasting all of these events. So now, as I said, this we are closing the year up with. We wanted to put something in here that we hadn't done before, and this next panel is going to begin a discussion that you know we hear from the lawyers, from the auditors, from everyone involved helping the company, but now we're going to hear from the company itself, and in particular, a company who's going to utilize these great exemptions in the Jobs Act, and that's going to be led by Julian Phelps, one of our colleagues on our team, and he's going to welcome Jake Sherman as well here. Gentlemen, have a great session, and anything you need, just let us know. Okay? Enjoy.
Great stuff. All right. Hi, Jake. This is Julian Sierra at Core Connects, and I've got Jake Sherman from NeoVision Ventures. Jake, how's it going today, and how are things going at NeoVision?
Oh, things are going well, Julian, and thanks for having me.
Oh, it's our pleasure. Yeah, this is a nice focused session. Unfortunately, we had as well our other colleague and industry colleague called Jennifer at Province Brands of Canada. Obviously some things came up. No worries. We're going to steal the spotlight today, Jake.
All right, let's do it.
It's all about, understanding, how these exemption regulations and why you as a company, chose to utilize them and understand a little bit more of this path, this journey that you're on. We always refer to it as a journey. But before we dive into all of that, why don't you tell us a little bit about NeoVision Ventures and give the audience a little bit of a flavor of what you're doing over there?
Yeah, sure. So I'm here, I guess, representing two separate companies. One is NeoVision Ventures, and then the other is Sentinel. So NeoVision Ventures is a venture capital firm, and we've been looking at startup companies, and one of the interesting facets that we've been sort of getting more and more involved with, as from our time talking together, is learning more about Reg A and how that's empowering other companies to raise money. And so one of the associated things that comes with Reg A is sort of the are expensive startup costs, and what NeoVision Ventures aspires to do is invest, cover these startup costs for these companies looking to raise capital in exchange for equity, and so to sort of help facilitate Reg A and promote its use. And we've also started doing our own Reg A offering, and that's what Sentinel is. It's a ESG focused Bitcoin mining operation that we're currently starting the Reg A process on. And one of the reasons we were so excited about it is, I guess you could say it's a philosophical preference, in the sense that if you look at Bitcoin and cryptocurrency in general, this has been really brought to the mainstream by retail investors. This is not something that started with institutions and accredited investors. And so we really wanted to open up this kind of investment to everybody. And so Reg A seemed a great way to tap into that marketplace.
Amazing. No, that's fantastic, Jake. I mean, a lot of folks, they obviously have heard of crypto, digital assets, the craze that's going on out in the marketplace is definitely coming. I mean, we've already seen countries adopt, digital currency and all of that. Now, for the audience's sake as well, I mean, when we're talking Bitcoin mining, we're not talking mining as traditional, resource companies are digging up the earth. We're talking about having these different establishments or I guess locations where different servers, or for lack of a better term, are mining, are discovering and solving algorithms to find and I guess mine these coins, these digital currency coins. Is that correct? A fair assumption?
Right, and everything is very ESG focused. We're going to be using, solar panels, hydro. We're focused on doing something, good for the environment, and I think that's also something that retail investors connect with.
That's amazing. Yeah, because that's the aspect that has had some controversy, of course, with the digital currency mining, digital mining side of things, right? Crypto mining. So that aspect, I mean, how you mentioned some of the, I guess, renewable energy sources or low cost energy is, I've even heard of some companies now leveraging the byproduct of all these, if you can imagine, this electricity and this heat that's being generated in these as they call them, Bitcoin mining farms. That is also a new thing that they're doing. They're starting to have heat capture or utilize this facility to perhaps integrate vertical farming, vertical agricultural farming, believe it or not, right? So are there these are things that I would imagine a lot of even the company you're working with at Sentinel, they've figured out a way to make this a little bit more appropriate in terms of an investment that covers the ESG sector.
Right. We're exploring a lot of different ways to go about it, but the end goal is the same. We don't want to have any carbon footprint. So, right. The end goal is ESG first.
Oh, lovely. Okay, well, now getting back to a little bit about your journey into this and why and you're probably you've opened the floodgates in the beginning of the conversation with you're looking and aspiring to helping companies by funding and actually providing the upfront capital for the companies that you find are the ones that are ready for investment, so to speak. What are some of the criterias or things that you're looking for today to actually qualify or help these companies along? Are there, maybe describe the portfolio that you're looking to build or the types of companies that are ready for this type of support and investment?
Sure. So, I mean, I think that we're fairly industry agnostic. One of the important things for us is that this has to be an investment that, retail can get behind. It has to be something typically that they use. And what I'm seeing is very popular and successful rather is, companies that are raising money from investors that use their product. So something like that would have a larger appeal. The great thing about this is that there's so many different opportunities for these companies to be successful with Reg A that we have a very broad reach and pool of where we're looking.
That's amazing. Yeah. Okay. Perfect. Now, with your own journey, what decided and what pushed you to the point where you said, great, we're at the point where I guess with Neovision Ventures, we're going to look at doing a Reg A. What is that kind of impetus to help, companies that are on the call and different founders that are on this webinar today, what made you say, this is why I'm choosing to raise capital this way? What are some of the highlights?
I mean, I think that we're just in the midst of a retail investing revolution. Whether it's, if you look at Robinhood and the stock market and, even these meme stocks and all this craze, it's that everyone is investing now. And with the Jobs Act, people now have an opportunity to invest. And so we really just want to foster that. And I think that there's just a tremendous opportunity for companies to access capital using this new format.
Mm-hmm. Yeah, and you and I have had some conversations, of course, along this path, and we've even looked at kind of what the exemption regulations allows you to do, whether it's Reg CF crowdfunding, where you can now, as of March, raise up to $5 million, and also under Reg A up to $75 million. I mean, these are powerful tools and frameworks of raising capital in the private markets. Each one of them have, I guess additional nuances that make it different from going public or different from, doing a different type of raise or raising from, venture capital and different things. This is where I would dare to say, dare to say that the companies that are leveraging these see not only the benefit that you mentioned of the crowd and equity crowdfunding because everybody's investing, but also the fact that there's interesting nuances in terms of how you're able to incentivize the investor, how you can add perks or bonus shares and offer all of these different nuances that will really also add that additional layer of reasoning why the crowd or that investor wants to participate and champion your brand. You want to add a little bit to that as well?
Yeah, I think, one of the things that's really exciting about this as a founder, as opposed to going to institutional investors, is that you really get to curate a story that can appeal to people. And for us, ESG, I think, is something that is very important to a lot of people. That it gives us an opportunity, because it's important to us too. It gives us an opportunity to cater to the right audience. And I think if you look at bonus shares, whether it's offering shares for investing earlier in larger amounts, you can really curate the experience that you want to have for your investors, and it doesn't have to be this very standard institutional, this is what we're offering, this is the deal. You really have an opportunity to customize the offering in that sense.
Very true. And for those on the call today, ESG is really the environmental, social, and corporate governance aspects of, investing, maybe more ethically, or in having to invest in what they sometimes refer to impact investment, really. And, it couldn't come at a better time. I mean, the world we're seeing today is facing so many, climatic changes, right? And all of that. So this is really where there's been a huge surge of investment going on, not only in our private capital markets, but also in the public side as well. And I think that's important to just point out, in the sense that we're at a very interesting intersection where technology and ESG and different ethical and social awareness is growing. But it's an opportunity where different companies that are coming to stage, and they're dreaming up these different solutions in the space, just like Sentinel with your vision for more green and more environmentally friendly Bitcoin mining, for example, but other solutions. It can be something simple as well for the retail side of things. It's, as you said, the same way you're looking at agnostic in different verticals. These regulations apply to everyone, and I think that definitely commend you folks as well for taking that step with not only your fund, but maybe describe a little bit about your venture fund and how that's structured, and we can kind of learn a little bit more about how that will operate.
Yeah, sure. So, I mean, we're looking for companies that are going to have retail appeal. Um, as I mentioned before, things that are, when you're selling to the customer, the investor, that's something we're really more interested in, as opposed to, something that would be sold more to a company or a larger institution. And, sustainability is key, I think, in terms of being successful for a raise. But yeah, so like what we would do is we would come to an agreement with these companies where we would finance all of the expenses. We've spoken about these expenses at length, Julian. Whether it's the legal investor acquisition is probably the largest. And so it can come out to hundreds of thousands of dollars before you start to see a return on investment. And so, oftentimes companies going about the Reg A raise, they may not necessarily have hundreds of thousands of dollars at their disposal, but they also have a great product or service that is tremendous appeal to retail. And so we would look into that, and if we agree, with their vision, this would be a great, mutually beneficial opportunity for us to come in, cover these costs, and help facilitate this Reg A raise.
Yeah, that makes sense as well. And with that is also, I guess, you're looking at the total package as well. In this ecosystem, we got to thank and acknowledge all of the folks that have, helped, the ecosystem build. You heard it even from David Wield. It's not easy to build and grow an ecosystem to where it's at today. So in that ecosystem and in these fundraisers where we're looking at Reg CF and Reg A, a lot of the different components, it really does take a team to build that successful raise. We look at not only the technology and the SEC registered transfer agent side, but also we're looking at having a broker dealer at for most raises that will do the compliance and handle all of the state filing regulations, as well as the law firm that will file the regulation itself, right? So doing the Reg CF or Reg A raise. Then you also have the auditing firm if you need that to raise over the threshold limits. And lastly, of course, a very important component is the investor acquisition, the marketing. So all of those combined, I would say, really, is probably key as well, to know that those are in place for the types of companies, or that you have that solution, with your approach to funding the companies that you're looking at.
No, absolutely. And we've had a tremendous opportunity to meet with, a lot of players. Everyone's been very knowledgeable, helpful, and they have very clear visions, to get us there. And so it's with that guidance that gives me a lot of optimism and encouragement that, you know, this process is something that can be successful for a lot of people.
That makes sense. Well, one of the things that I get questioned on and asked about founders often and teams that are contemplating this is, if these regulations weren't available, I would have gone down the path of, looking at venture capital or other sources of income. Were those ever, what did you do before this, Jake? Even in your journey, or perhaps what have some companies that you looked at and advised with and spoken to considered, or maybe those are some insights where we can understand what the path was and now what it is today.
Yeah, sure. So, I mean, I think there are a number of reasons why a company would choose to go this route as opposed to traditional venture. And, some of those are, as I mentioned before, it's a great way to connect with your customers if you make them investors. Certain companies are an excellent fit for that type of criteria. But there could be other business decisions as well. A company may not want to give up seats on its board to venture capital. They may not want to have, just voices in the room. They want to control the process themselves. And if you go with venture, typically they're going to have to endure maybe a lot of insight that you may not want. um, Venture capital may insist on a certain valuation, certain discounts. You may not be happy with your valuation. You do have more flexibility here to sort of set the valuation that you're looking for. As an entrepreneur, something that you feel is fair that venture capital may not see eye to eye with you on. So, there are a number of reasons, but, I think that arriving here, it definitely has its benefits over traditional venture. That's for sure.
Right. Yeah. And I think you nailed one, especially it's having the control, for founding teams. We've heard the story all too often that, they seek out a certain route of capital, and next thing they become diluted in their company equity and lose control of the company. This is a way of not only maintaining a certain threshold of equity control, but also being able to go back over and over to the crowd time and again and raise the capital that you need, right? And so that's something that in itself is powerful. Reg A especially, I mean, you can purchase back up to 30% of the shares issued on an annual basis, which is, I mean, how powerful is that? Now you can actually put those shares back into the company treasury and then utilize that to reissue the next round, right? So that's allowing you to maintain the equity control in some form or fashion, right? So that's a powerful thing. And now with secondary market, all of that is possible. So I think, like you mentioned, Jake, there's a lot of upside to this, and it's important to kind of wrap the minds around this and say, okay, this may be a great launching pad with Reg CF and Reg A as well to follow on with those investment rounds. But also, I mean, we even had questions from the crowd here on the costs involved with Reg CF and Reg A, and I know some of those, but I'm just wondering for yourselves, what have you considered with these companies in terms of the cost? We know Reg A costs more to get to the start line than Reg CF. Do you want to provide a little insight to the audience here on those?
Yeah, so I mean, in just sort of adding up all the costs together, that we would have to come out of pocket with, and in speaking with some very talented investor acquisition companies, we're told that after 3 months or so of actively marketing, enough money will be coming in to sustain reinvesting the marketing dollars. So before that point happens, you do have to cover your startup with investor acquisitions in 3 months of advertising, as well as their fees. Legal is about 45,000. With our lawyer, we're using Marty Tate. He's excellent. And so, I think all in all, maybe come out of pocket about 400,000, depending on how much you want to do marketing.
Yeah, that makes sense. Yeah, and definitely, we echo that as well. There's a range. I mean, Reg CF, that getting to the start line easily can be about 30 grand, but it takes money to raise capital, right? And ultimately, when working with the investor acquisition group, that's going to drive the investor eyeballs. They've got a database that they can tap into. They're utilizing and leveraging social media, different ad streams that will is part of their mix of secret sauce in terms of promoting the offering, and all of that is really how you're going to get looks into that offering that you again control on your website as an offshoot on an investment landing page. That is quite powerful. You're getting all the data on these individual investors. You're able to remarket and target the ones that drop off. I think those are some of the features that we discussed in the past as well, Jake, that really play to the strengths of this. You're also building your own network and your own I guess tribe, if you will, right? A tribe of investors and brand ambassadors that are gonna tell other people, other folks, and the viral effect of that is also great, because they're the ones that we've noticed that they're going to be investing time and again to further see the success of that company, right? If you're communicating and being transparent, I think those are all key issues as well. So yeah, Reg CF, generally you're seeing, to get to the start line, we're going to just throw a ballpark figure around 30 to 45,000. The Reg A is more expensive to get to that start line. Definitely earmark a budget much greater than that. It's going to be more costly to get to the start line, probably about 10 times more. So around 300,000, maybe 100,000 of that just to start off with some marketing. But marketing budget is where you're going to have the investor acquisition is going to have a lot more to do. So yeah, I guess you'd echo that as well, Jay.
No, absolutely. And another option for companies to explore is you can always start with the CF and then use that money, it has smaller startup costs, but the money you raise from that can be used to finance your Reg A. That's always an option, and we're actually exploring that with Sentinel as well. But just to echo one of your points, Julian, one of my favorite things about it is that if you're marketing something and it's not necessarily resonating with your audience, you can change it, you can tweak things, and everything is in your control. And so it's a process where from start to finish, you have the ability, if things are not going well, to change them and get to where you want to.
Makes sense. Absolutely. Well, these are valuable insights, and really, getting back to the theme of the discussion today, it's really all about daring to dream, allowing us to empower really the entrepreneur, the founders, all of those team members that are at the early stage and even further along in their fundraising journey. It's really, this is ending off 2021. We had a vision of leveling up. Now it's about daring to dream and pushing your ideas into reality and getting these things live and up and going. And we want to really thank, again, the ecosystem. Thank you, Jake, with the work you're doing with NeoVision Ventures. Again, Jake's going to be a wonderful source for companies to reach out to. And of course, it comes with all of our ecosystem partners, everything that was mentioned earlier on the discussion. So thank you to all the ecosystem partners that we work with on a daily basis.
It is interesting, though.
Yeah.
The conversation was interesting. What caught me off guard, I wanted to come in earlier, but I let you have the conversation because it was really good. So obviously we brought Jake in because he's actually using the regulation, but the twister there, I don't know how you got that out of him. Seriously. But this is a really, I read an article, I'm sure all of you did as well, where it was on Forbes, where Sequoia, one of the leading venture capitalists, said the venture capital model is broken. I mean, that's pretty powerful. Yeah, it's pretty broken. And I didn't expect this part, Jake, which is great. Not only are you using the regulation for when existing portfolio companies you have, and you're leading that all the way through, but what you're saying is that the company that you formed, your fund, is also to invest in other companies as well that are going to use these regulations. We're seeing a dedicated investor for this. I think that in itself speaks. I mean, there it is. That's what the job search is all about. This, I'm sure David is listening on. This is what we've been dreaming for since the day all this got started. Was not only to see it from the sidelines, but to be engaged, to utilize it, and then to say, hey, not only we're utilizing, we're also reinvesting in company. That I was like with anticipation trying to come back in here.
I know
So-
you're tickled pink to hear that.
yeah, well, I was, because you Julian, you and I deal with companies every day, right? We're dealing with entrepreneurs who want to take their journey, and a lot of the times the roadblock, oh, this is going to cost a lot of money. But if you think about it, if you really think about it, I know some people are asking about cost and all that. We're going to get into that as you hear it, and there's some documentation we'll provide you, the complete breakdown. If there's one thing you're going to find in this ecosystem that you're stepping into, it's completely transparent, from the broker-dealer fees to the transfer agent fees to the use of the technology to the compliance fees, everything, including the investor acquisition firms. But regardless if they're transparent or not, it does cost money to bring it in. And now there's a way to help both these two environments. I think that's what a way to, you both blew me out. So I was excited. So like, come on, Julian, let me in. So I'm sure there's a lot of people eager to. So Jake, I think once we put you in the lounge, it's not our fault. I think everybody's going to want to talk to you, which is great. I mean, this is most of the companies and the guests that are attending our show today are coming because they too are doing their regulation CF or regulation and offering. It's encouraging for them to hear that the investment community is starting to see that this is a way to move forward. So we're going to end this session right now. We're going to ask you to go to the lounge. In the lounge, there are two ways you can participate. There are tables, and in the tables, you'll see people's pictures. By simply clicking join, you can go there, have a conversation with someone face to face. That's right. The video turns on, or you can do chatting. The other one is called the speed dating. That's right. You can do the speed dating, and it'll look for someone to match you with. Or you just go to a table that someone is inside, or you go in there by yourself and somebody will join you. This way you'll have a few minutes before our next session gets started. We're going to give everybody just about 5-minute break to get the other panelists into here. So it'll give you a bit of time to meet everyone. Thank you again, Jake. Yes,
I just had to add one little funny part.
Yeah, go for it.
Speaking about speed dating on there, the tables that we'll join, I had somebody call this date to dream. So
oh yeah, date to dream. Okay.
Yeah.
Okay.
So there you go. There is a part of dating in this. Go ahead and release us to the dating room.
Yeah, because it looks like Jason Futko is ready to go there. He's ready to date to dream. All right. Thank you both. Thank you so much. We'll see you on the other one.
Thanks for having me, guys.